Hey everyone. One of the most important thing while doing investment is I think risk management, no doubt, because most of the people focus on diversification, and I have analyzed some of the most successful people's portfolio. Like if you look into the portfolio of Warren Buffett and Rakesh Jhunjhunwala, Radhakrishna Damani, there is one thing common between all these investors. No doubt their portfolio is well diversified, but a significant portion of their portfolio was very concentrated. I think if you do the risk management, you can survive big market crashes. At least you will have the mental peace while doing investment. I think for investing more than return, the mental peace that you are having is the most important thing. And to achieve this, I think risk management is one of the most effective thing. So in this video we will talk about a little bit of diversification, but the first half of this video will be on diversification, and then we will talk about risk management, which is one of the most important thing. So without any further delay, let's directly jump into the video. Okay, so for diversification we will be using the 50, 30 and 20 rule. And by the way, this is not a hard and fast rule that you have to follow. It can be 40, 30 and 30 depending on your risk appetite and the return you are expecting from the market, right? Okay, so for diversification you don't need to invest in different type of assets. Okay, so what do I mean by different type of assets? So people invest different type of asset, for example mutual fund and small case and ETF, and they think their portfolio is well diversified, but this is not true. Let me explain. Suppose you have invested some of your money in a particular ETF, right, and some of your money in a mutual fund, but you don't know where they are investing their money. For example, suppose some of your money are in a particular ETF A and some of your money in a mutual fund B, but those A and B are investing some of the companies. If those companies are safe, then your portfolio is not diversified at all, right? So what you need to do, ideally it's recommended that 40 or 50% of your total capital should go into rock solid assets where the return is almost guaranteed. Sometimes there can be recession over a decade, sometimes there can be big market crashes, and sometimes there are slow GDP growth rate. To handle all this issue, 50% of your capital, you should allocate 50% of your capital where the volatility is low to medium and the return is almost guaranteed. When I say almost, you don't know, no matter how safe investments you do, return is always subjected to market sentiments. So that's why it's almost guaranteed, right? So now let's talk about it. So 50% of your money you can allocate into ETFs where the volatility is extremely low. For example, Nifty 50 ETF. I will not take any specific names, I will just tell you the general things that you can do. And you can also invest in ETFs where the ETFs is investing into the equity, or you can say the index ETF, right? Now it's up to you whether you can invest in ETFs or mutual funds, or you can invest in small case. For example, there are some small case where the return is very low, but those small case comes under low volatility category, means no matter whether there is a market crash, market recession, or whatever it is, those small cases always given a very consistent return irrespective of the market conditions. So you can do this as well. Okay, so after making 50% into the rock solid assets that will help you during the market crashes or recession or slow economic growth, now let's talk about growth. So ideally you should invest 30% of your total capital into the growth oriented assets. In growth oriented asset there are small case, mutual funds and ETFs. There are so many things are there. Let's talk about one by one. So ideally you should invest 30% of your total capital into the mid cap or small cap sectors. So if you invest in large cap, maybe you will get a very stable or average return. You will not be able to get a very good returns. As we have already made 50% of our investment into the stable investments or assets, now we are taking a bit risk with our 30% of our capital, so we can invest into the small cap or mid cap sectors. So there are some sector specific small caps. For example, now in the upcoming budget of February, we don't know what will be the main focus of this budget. Some analyst has analyzed that maybe infrastructure can be the sector where they will be allocating some funds of the national budget, and maybe in near future the infrastructure sector can boom. We don't know what will happen. Recently we have seen a EV boom and AI boom. Maybe the next boom can be the infrastructure segment. We don't know, it's just assumption. So you can do some sector specific investments to get a very good return. Now to achieve that, there are some mutual funds that provide you some sector specific investments. There are some ETFs as well that also do the sector specific investments. Okay, and you can also pick some individual stocks from small caps or medium caps if you after doing the fundamental analysis to do the sector specific investments, right? Okay. So we have already made some rock solid investments, some growth oriented investments. Now with the remaining 10 or 15% of our capital, we will make some aggressive investments, and we will try to take as much risk as possible with the remaining money, and we will aim for maximum return. Okay, so if you analyze the last 10 years returns of every type of assets, so I think crypto is in number one. But there are so many people who don't have faith in crypto. If I talk about me personally, I don't like cryptos. I don't understand the technology behind it, so I don't invest in cryptos. But if you have faith in cryptos, you may allocate 1 or 2 or 3% of your money into the cryptos, but you should not invest your money into the Bitcoin or Ethereum or Solana, because this type of cryptos has been saturated for a very long time, and the only way to get huge amount of return from cryptos is to invest in coins that have recently listed, because on these coins you can have the maximum probability of growth. And also you should never invest on meme coins. These are scam, to be very honest. You should invest in coins where they are trying to solve a specific problem, right? Or they are working as a platform. So on this coin you can take a bet. The first thing is crypto that has given really good amount of return. But if you don't like crypto, it's completely fine to ignore this. Let's move to the next asset, which is IPO. IPO has given really good amount of return in the next 10 years, but I am talking about only some specific type of IPO. And while investing in IPO, you have to take cautions. So let's talk about it in detail. So most of the companies try to launch their IPO when the market sentiments are in greed or over greed segment, right? Or over greed situation, when everybody are very greedy and market sentiments are really positive and GDP growth rate is also really high, or there is a positive environment everywhere. That time most of the companies open their IPO, and the reality is at that time most of the companies make really good profit because of their IPO. And as investors, when the bull run ends, we have to face huge losses, right? Because at that time all the prices are really high, so you are paying huge amount of money, or you are paying higher prices for the same thing that you can get at a less price. So before investing in IPO, the thing that you need to keep in mind is that when there is blood in the ocean, that is the right time to make investment into the IPOs. So when there is a negative sentiment everywhere, when there is a panic situation, at that time most of the companies don't launch their IPOs. But there will be always some companies that launches their IPO at that time. If you make your investment at that time, I think there is a high probability that you will make profit. So till now we have covered the diversification part. Now let's talk about the risk management, which is one of the most important thing in investing. And risk management will help you in case of big market crashes, market correction. And the best thing is if you done the risk management properly, you can have a mental peace while investing, and I think this is the most important thing. So in this video I will be talking about the tricks or strategies that I personally use for doing risk management, right? So the first thing that I do is I actually bought some put of the same stocks that I have already invested. So it's 100% sure that nobody can predict the market crash or market correction precisely. but there are some index or combination of index that will tell you the probability of market crash. So if the probability of market crash is extremely high, in that case I bought some put options of the same stock that I have already bought. So in that case, if the market crash happens, because I had bought some put options, I can get a significant gains from the put option. But if there is no market crash, what I lost is just the premium that I paid to buy the put option. Let's talk about the second strategy that I follow for risk management. Suppose the market crash has already started or market correction has already started. In that case, instead of selling your stocks in loss or instead of panic selling, what you can do is split your remaining capital or emergency capital into 2 or 3 parts and keep deploying the capitals as the market goes more and more down. So this is the second thing that I do for doing risk management, and in the long term you will get the benefit of doing average. And the third thing that I do for risk management is doing the rebalance. So I make most of my investment through small case, and as soon as there is a rebalance available, I immediately do the rebalance. And if you want to know my top 10 favorite small case, then you can watch this video as well. And guys, this is all for today's video. If you think this video is helpful, then please hit the like button and subscribe to the channel if you want to watch this type of videos more in future. And this is all for today. I will catch you in the next one.